To today's session. My name is Omari Frazier. I sit on the board of Paterson Alliance. I'm also employed with Chase as a community manager. I'm a community manager that's based in Paterson, and I cover the greater Passaic County area. Paterson, as I always says, I wasn't born here, but it became a second home instantly, right, because of all the love. I want to start first by acknowledging some of the board members that are here. Some aren't here. If you are here, when I call your name, just stand up and be acknowledged. And for those who aren't here, we'll just make sure we capture their name. And then we'll get into why we're here, and we'll kick things off. Right. Sounds good?
Yes.
Right. So aside Akhtar, I want to acknowledge him. Annie Alonso, Dr. Brenda Belmont, Kara Rabbit, Ashley Biggs, William Bryant, Josh Cheney. Well, I wouldn't know if he was here. Jim Walsh, Glenn Chockley, Rosie Grant, Carlos Lopez, Ron Saban, and I want to acknowledge our President Richard William. Also, I want to acknowledge Shane Lemon and Lawrence Burke. All right. So, thank you for that. So, why did we decide to host this event? We have our monthly breakfast meetings, and they're always a great source of information. But when I think about all the things that have happened since we've been in this year, 2025, it's a lot of things environmental, right? I don't mean the physical environment, just the environment in total. It's causing a lot of unrest, right? And whatever political spectrum you fall on, you have to admit things are a little bit different, right? People feel a little bit insecure and unsecure. But with that said, thinking about the non-for-profit space, right? Because again, we are the ones who serve the community. Right? When people need help, we're the ones to show up to help, to provide resources, whether it's a conversation or something that's going to impact them financially. But in my thinking about this year, thinking about some of the struggles, there's really two things that are the most common fears, if you will, of nonprofits. That's always financial stability and regulatory pressures. So knowing that, myself, Shaniqua, my friends at Chase, and our friends at Sax said, we got to do something, right? Let's have a session where we can talk about these things to arm our organizations with things that they need to be able to withstand this environment and continue to serve our people. Because at the end of the day, that's what we're all about, right? Servicing our people. Did I get a hand clap for that? So with that said, I want to introduce our first panel. I want to say a couple words of introduction. I really want, and we really have a knowledgeable set here. And if you can indulge me, I want to do this new school style. Right? Normally, I guess when you are old school, you start to feel old school. You can't remember things. So I think I'm starting to slide into that. So just bear with me as I read this, but it's important that I read this because I really want to capture the expertise that we have here in the room. So first I want to acknowledge April. April is an ardent partner at Sax in the non-profit practice. She started her career at Sax 19 years ago, working in various industries, and over the years developed a strong passion for working with non-profit organizations. April oversees audits for her clients, presents audit and financial results to the boards, and strives to make recommendations for improvement whenever possible. Give it up for April. I next want to introduce and talk about Adam Holzberg. Adam is also an audit partner at Sax with 13 years of experience working with clients in the not-for-profit space, as well as the healthcare and real estate industries. Adam specializes in addressing the unique needs of not-for-profit organizations, helping them achieve sustainability for their missions. Let's give it up for one of my partners at Chase, one of my favorite partners, Marisa Diaz. So Marisa has been with Chase. 17 seems to be the the year here, right? She's been with Chase for 17 years, and she's worked both in the for-profit sector as well as the non-for-profit sector. Currently, she's working in the non-for-profit education sector, and is one of the co-coverers. That's a new title I gave her. The co-coverers of the state of New Jersey. So thank you for making time to be with us today. Thank you for being a great part.
So the financial statements, we often say, are the responsibility of management and the board. So they are your financial statements. Us as CPAs are giving an opinion on the financial statements. So we a lot of times assist in the preparation of your statements. They really are yours. So, feel free to give your accountant that input. Make sure you read through it. Make sure that the nature of organization, that very first footnote, depicts what you do and who you help. I think that's a really important part of the financial statements. So as part of management's responsibility of preparing your financial statements, your responsibility is also to assess that those financial statements and your operations are going to continue for at least a year. At least a year beyond when your auditors issue that financial statement. So the wording there is going concern, which is a little tricky because say, wait, there's no completion. Like, no, we got it. Is there any substantial doubt about your ability to continue as a going concern? The wording gets really tricky. But basically what it means is you have to look at your operations and make sure that the operations of the entity are going to continue for at least a year beyond when your auditors are finishing up that audit. Something that's really important to keep in mind. So also financial statements, right? You have the whole financial statement, and I'll go into a couple of the statements that make up the financials. But your auditor is giving an opinion on those financial statements. So we could be doing an audit, or we could be doing something called a review. So a lot of you may get audits, but I just want to clarify what the difference is between the two. So a audit is required when a nonprofit has at least $1 million worth of revenue. So if you fall under that $1 million threshold, the state of New Jersey does not require you to have an audit. But there are times that you want to take other things into consideration, like are your donors and partners going to take an audit? Do your grant agencies want to see an audit? So who's looking at those financial statements, and it's going to dictate what kind of an opinion your auditors require to give you on that financial. So an audit is the deepest dive you can have. Even with an audit, there's different kinds of auditing levels that we have. But an audit, the premise behind it is you look at all of your controls. We look at your controls over technology, over your accounting software. We look at your controls over the financial reporting, the revenue cycle, the expense.
All right. Good morning, everyone.
Good morning. Good morning.
My name is Holzberg. I'm a partner here at Sax. And now that everyone's experts at nonprofit financial statements, we're gonna talk about what do those numbers mean. When you're looking at those statements, what are you seeing? What does that mean for a reflection of your organization? What are other people looking at when they're looking at your statements? Things of that matter. So, common question I get a lot of times at board meeting is, how, as an organization, how do we compare to other organizations? It's a very common mindset. Everybody wants to compare to others. The issue with nonprofits especially is that every nonprofit has a different mission, there's different funding streams, and that really impacts your financial statements and how each statements really look like to a reader. So it is hard to compare every nonprofit. It's always my answer. It's hard. But one way you can really get a sense of how you're doing is what's called KPIs, key performance indicators. There are different kinds of KPIs. You have financial, you have operational. I'll go over a little of the operational, but really my focus as a CPA is the financial side of things. So KPIs, they are measurable values that show how effectively an organization is achieving key objectives, meaningful insights. So in a way, it's really just telling you what is going on. Is there any red flags, any green flags, and just give you a more better sense of what's going on. Because if you're showing, let's say, cash of 100,000, is that good? Is that bad? That number alone doesn't tell you much. When you start looking at other numbers with it and relationships, that's when you get a sense of what's really going on in your organization. So I mentioned before, there's different kind of KPIs, and I'm going to focus on financial. But from an operating standpoint, you do have other kind of KPIs, and these are just ways to evaluate how the organization is doing. So you have donor retention rate, average donation size, KPIs on volunteer management, utilization. The list keeps going on and on when it comes from operations. But my focus is going to be on the financial side. And when you're looking at the financial KPIs, it's really a way to provide financial storytelling. By looking at the KPIs, get a sense of how stable is the organization. Are you allocating resources appropriately in accordance with the mission? How's your fundraising? Is it affected based on how much you're spending? And then, are you really relying too much on certain funding streams? Right now, it's very important to diversify, to all the uncertainty. And so, what's your level of diversity right now? How's your funding streams doing? Are you overly dependent on a certain funding stream? It's kind of answering those kind of questions for you.
My role now has been in this role for about 2 years or so, but I've been now with the bank, like Omari said, for about 17 years, and I've seen both sides, both the for-profit and the nonprofit side. But some things are always consistent, and that is relationship. So relationship with the bank is very, very important. Having your banker go to visit your location, meet your team, that's super important. There's a lot of things that we've talked about, which are all numerical, and numerical is great and is very important for certain things. But we also want to look at the other part of it, which is that you want your bank to know who you are, and you want them to have a reciprocal relationship with you. And so it's so important to make sure that you're working with a bank that understands your organization. So what I mean by that is there are certain banks that are out there like us that specifically focus on not-for-profits. So both myself, like on the front end with my team, but also on the back end. They really understand not-for-profits. They have the infrastructure that's separate within the bank, right? Everybody knows Chase is huge. We're in every state, and it's very important to have that representation because as you can see through the dialogues that we've had today, the not-for-profit financial statements and the way that they work, because they're mission focused and they're not necessarily all about for-profit, that's not their goal. It's really important to have a bank by you that understands that, and they're not just catering to the overall population because you're not the overall generic population. So that's one of the things that I just wanted to notate and make a big emphasis on. So from a bank perspective, we look at the financial statements, and I always say, going back to that relationship, you always want to start with the story, right? Because the numbers are the numbers, but you always want to be able to explain the numbers, right? So that's something that April and Adam have been saying since they started this conversation today. So it's very important to be able to understand your numbers because as a bank, we're going to be looking at the last 3 years. Let's say you come to us for a line of credit or a mortgage. We're going to ask you for the last 3 years. Preferably of your audited financial statements, especially in the not-for-profit world, because in our space, we don't require personal guarantors. So you're not personally responsible. You're not going to have a credit check. It's really based off of the financials of the not-for-profit. And because of that, we're really looking at the last 3 years, and we want that deep dive that April mentioned, right? Because we're looking at the footnotes. We're trying to put the years together and put a story together. And that's why it's really important that if you are looking ahead and you want to buy a building or you want a line of credit, that you're discussing with your tax advisors and your bank simultaneously years before that transaction actually takes place, to make sure that you're putting yourself in the right place to make sure that the outcome is going to be positive.
Jumping right into questions for our panel here, and this is addressed to any of you, so feel free to jump in as you see fit. So number one, what are the most significant shifts you're seeing in federal funding trends for nonprofits in 2025? And how should organizations prepare for these shifts?
I'll start. So we know the obvious, right? The federal funding freezes, the executive orders that are affecting funding that is not in line with the administration's current goals and objectives. So that's the obvious, right? And I think right now, the best thing you can do to kind of prepare for that uncertainty is to think about what we call contingency planning, right? So when you're developing your budget, side by side with that budget, you also want to actually develop a contingency plan that will outline, and I hate to think this way, but kind of the worst case scenario, right? If I lose this funding, what do I have to do with my expenses and my revenue to keep the core mission, the core programs going? So I think that that's one thing that you can practice now and probably should do going forward, is create a contingency plan with your budget.
How should nonprofit leaders communicate financial challenges and be transparent with their boards, their funders, and all of their stakeholders?
I think it's just important, again, to have that relationship. It all starts with that. So if you're honest with your banker and you're honest with, how you're running the organization, I think that's really key. Honesty and transparency is really important because, like, for example, when we review requests for lending, sometimes there's obvious things that, are not addressed. And, we have to dig a little bit deeper to really get the answers to our questions. But I think if you go up front and you talk about that, you talk about everything that you're doing. Like, for example, how do you deal with issues like we're facing currently, right? With uncertainty. You don't know if you're going to be able to keep everybody that you have on staff. You don't know if the funding is going to come through. Is there another executive order on its way? So I think it's super important to just have those contingency plans, be transparent, prepare for anything that can potentially happen, right? Have different scenarios, like Warren was saying. It's super important to also address that, the tenure of your board, right? If you have a board that's been, 15, 20, 30 years, that's super important. Those are things that the bank cares about. Again, the bank obviously will look at the financial statements, and that's a big important part of it. And I don't want to discount it because it is very important to look at those audited financial statements and everything that we've discussed this morning. But there's another piece of it. And, just talking about the board, talking about who's running it, right? Who is the executive director? What is their experience? Share their resume, share their skill set, share what they've done with other organizations, share what they've done to basically explain that they've been through these cycles, right? Because, although this is a very different situation and every situation is a little bit different, you have different administration, different objectives, in terms of politics and everything that's going on, but we've had recessions, we've had depressions. This is not something that is just something that's just only impacting now in 2025. If you look back at our history, you're going to see that a lot of things have happened and we've always gotten up, right? You fall, but you get back up. And so I think that's really just the most important part. Stay positive, think about what your plan is, prepare for the unexpected, but stay positive and just stay focused to the mission.
Nonprofit leaders who are trying to balance, a lot of us have immediate financial pressures right now with a long-term mission to have impact. So what advice right now in this moment would you give our nonprofit leaders?
I got the mic. I guess my initial advice is don't panic. Things aren't great right now. We all know that. Everyone's in the same boat with that situation, but it doesn't mean to panic and do something without a plan. When you do anything, it should really be a plan in place. You know, if you're looking for new funding streams, there should be a fundraising plan in place. Really target what you're looking for and execute on that plan. It shouldn't just be cast a wide net and hope something comes in. You should have a strategic plan in place, hopefully, and just what's the plan for the organization, and really follow through on the plan. It shouldn't just be throw everything up in the air because things aren't great right now. It's more long-term thinking. All right, today's not great. Tomorrow's probably not gonna be great, but we'll get better eventually. And we need to position ourselves in a manner to be successful. So maybe it's not necessarily trying to find new donors. Maybe that strategy is donor retention, retaining your existing donors. I mean, it's more expensive to go out and find a new donor than it is to keep a current donor. So how do you retain those current donors? Maybe that's your shift in strategy. So just, like I said, don't panic, and just do everything with a plan in place and follow through with that plan. You know, consult with your board. Your board has various expertise on it, hopefully. Maybe not.
I agree.
But they're at least a different perspective, different voice, a sounding board for you that you could just bounce ideas off. And I would say in times of uncertainty, you want to definitely tap more into your board in that regard and see what help they can really provide.